All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to go over sand. We're going to break things down on the daily time frame, all right, and go over the chart and go over why the heck did this coin just drop 20% in, a very short period of time. I actually have the answer to that for you guys. I'll break it down as well as a detailed technical analysis of the coin. What we're going to do is it's actually Apple, guys, okay? Apple recently crashed Sandbox. Now, I'm going to explain how Apple did it. Apple unveiled their recent goggles for augmented virtual reality called the Vision Pro, right? And the stock actually went and hit all-time highs. Now, Apple is famously known for being a sell the news stock, right? So the stock tends to typically rally into big events or earnings, things like that, and then it becomes a sell the news event. And so these are two articles written by the same company, okay, the same person. Look, we have Patrick Seitz right here on June 5th, and then on June 6th, Patrick Seitz again. And it talks about how the stock falls as critics call Vision Pro headset nerd goggles. Now, you may be confused and wondering, how is Apple related to the price of Sandbox and what is it doing? Well, from an investment standpoint, okay, both of these would be considered risk on technology investments, okay, from an institutional investment thesis, right? And if you take a look, all right, Apple, as I mentioned, is very famously known for being a sell the news stock. And this is very common to see, right? Initially, it gapped up on that news, created new all-time highs, and then it saw an amazing 4% drop. Now, that may not seem like a lot to you guys, but for Apple, a 4% drop in a very short amount of time is pretty significant, okay? We like to call these candles right here big red dildos, okay? We like to trade big red dildos and big green dildos. That's what makes us happy, okay? We love to see candles like this, especially for trading opportunities. But to show you guys, as I mentioned, Apple usually, you start to see people riding the hype train, okay, up to these events. And they had their WDC or WWDC, their Worldwide Developers Conference, and people were anticipating something big coming. So you see this hype train, and Sand, being that it's a metaverse crypto, okay, was riding off of some of this momentum, right? I mean, the stock market's been pretty bullish, tech has been pretty bullish, all right, and being that this was a metaverse related, okay, being that it's an augmented virtual reality announcement from Apple, all right, we can see here Apple is this white line right here, and Sandbox obviously is going to be right here, and we see just an absolute complete capitulation right here, completely wiping all of June's gains for Sandbox immediately as soon as Apple starts to sell off, right? I mean, we see huge red dildos right here, guys. So I just kind of wanted to break that down for you guys, is basically Apple pretty much crushed Sand's dreams of having a bullish rally there, from being, such a sell the news event, and being that this was a metaverse related announcement, we did end up seeing a big drop in Sand. And of course, cryptocurrency is going to be a lot more volatile. And when things are good, the gains are going to be higher. And when things are bad, the gains are going to be much worse. The losses are going to be much worse. And we can see a huge capitulation there, wiping out June's gains, as I mentioned, in Sandbox. So I'm actually going to break down the Sandbox chart for you guys. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied as legal, financial, or investment advice. All right, trading in stocks, bonds, commodity, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through that full disclaimer, and we'll go ahead and break down the Sandbox chart. So now you guys know a little bit why Sand crashed and saw that 20% drop in such a short amount of time. Okay, that's a little bit more from a fundamental perspective. Now, price action, okay, there's what I love to say and tell people is price action always precedes news, okay? And so meaning that, price alone, remember, these candlesticks, they all represent a live auction, all right? And it's a bid, you're seeing a constant auction and bids between buyers and sellers. And so when we had this initial breakout right here, this is the opportunity for bulls to really push forward and get a strong breakout, okay? But instead, we got something known as a look above and fail, all right? Now, the reason that a look above and fail is significant is it's basically a false breakout. But what you see here again is this is the bulls opportunity right here on the breakout. And where were the bulls, right? The bulls completely evaporated at this point, and we completely saw sellers take full control, which is why a look above and fail is so significant, aka a false breakout. It's significant because it shows you that bulls failed at the opportunity and buyers did not take advantage of the opportunity to push price higher. And it shows you that rather sellers are in full control of the price action right now and we're able to push price lower. So it's a bearish signal whenever you see these look above and fails, and it indicates that you're going to head towards the lower end of the range that you were trading in, which is what we did, right? We broke below that trend line and then we dropped very close to the bottom of our bottom trend line here that we have. So hopefully you understand that now, what a look above and fail is and why it's significant. Okay. And even if you're not watching the news, okay, or understanding that Apple was a sell the news event, and then, we saw a lot of hype around the initial, Apple announcement with the goggles and everything. We had a nice bull flag breakout here, but we weren't able to continue rallying and come up to our major resistance levels, our key levels that we needed to. All right. So for now, if we break below 0.48, okay, that is going to be the key level that I'm paying attention to right now. If we break below 0.48, we could head down to 0.4432, 0.4237, and 0.3957. Those are going to be the key areas in, bearish price targets, essentially right there. Now, what could happen is we could end up putting in a triple bottom here with a bottom here, a bottom here. And if we drop back down into this range near that 0.480 level, we could end up putting a potential triple bottom in and see if bulls really want to take advantage of the opportunity now and give us the breakout that the bulls deserve. But here's the thing. All right, we really need to break out above these three levels. Okay, we've had an extremely large move to the downside. All of these levels right here are healthy retracement territory to potentially continue the downtrend, right? And what these are is these are your three major Fibonacci retracement levels, the 61.8, 50%, and 38.2. You use these to identify trend continuation versus reversals because nothing moves in a straight line down or a straight line up. You get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. So we've had this huge move down. This is all healthy retracement territory to potentially continue heading lower, as I mentioned. But that doesn't mean that we can't go bullish. If you break through your major retracement levels, and let's say you move up, retrace, consolidate, and break through there, you can spot a potential downside reversal. Same thing to the upside. If you move down, retrace, consolidate, and break through those retracement levels, you can spot a potential upside reversal. So for bulls to really show that they have true control, they really need to break above 0.766. If they can get above 0.766, then that's when we have a chance of really seeing bulls try to step in and get a larger reversal back up to the 0.9 to 0.95 region. For now, everything is going to be a little bit indecisive, okay? And we're looking to see, are we going to break down into our bearish price targets, or are we going to get a real breakout of this pattern here and come up and test our major retracement levels? Another thing you can use to help you spot potential entries and exits is going to be your MACD indicator. When you see this red line cross down below, that's typically known as an exit signal. And you can see we had a very sharp move to the downside from the 0.7 area all the way down to that 0.48 area. Now, the big question right now, look at the MACD red line. It's starting to curl down below. It hasn't crossed below the yellow line, but if it does cross below that yellow line, there's a good chance we could see it come down and hit these bearish price targets. If you're going to be bullish on this, you want to see it stay above that yellow line and actually curl back up above and give an entry signal, right? You can see the entry signal over here, and we got a nice rally to the upside from, 0.5 all the way up to about 0.7 there. So a nice significant move of about 40% last time we saw an entry signal. Hopefully you guys learned something new in this video. If you did, smash that like button, subscribe to the channel, and I'm out.